Glen Wright II, a financial planning industry leader, a researcher, a critical thinker, noted author, and philanthropist. A business professional who strives to make the best decisions for his clients, employees, and family. Glen's formative years helped him realize his gift to understand and help others with their finances. That mission began with his mother and her financial needs.
I remember I was 10, 11 years old, and my parents were actually going through a divorce. And I guess the first mistake I saw was the attorney that worked for my mother. I asked her, we had two homes, one in the city and one in the suburbs, which home would you like to keep? Well, he recommended that she keep the one in the suburbs. Well, my mother's school teacher, the home in the suburbs was a lot nicer, but it had a bigger mortgage. And long story short, she couldn't afford that. We were out of the home, and I lived with family members going from place to place. And I also saw poor financial decisions there as well. And so my goal became, what can I do to help my mother? So I started reading anything that deal with statistics and finance, so I could help my mother become a better steward over her finances. And from there, I realized working at the banks and other financial institutions, that there were many other people just like my mother who wanted to do the right things, who were educated in many other disciplines, but still needed help financially and financial planning. So this was what I know I was meant to do.
That early life experience molded him into a financial professional wanting to help others with a seek-to-serve attitude. That's why when a family member reached out to him for help in their business, he was willing to help.
And in 2003, I partnered with a family member of mine who had a real estate firm. And the goal was to buy homes, fix them up, and sell them. I'd already had my own financial firm for a couple of years at that point, and that was pretty successful. And my goal was really to help them. So we'd done that. It actually worked pretty well the first couple of deals, so they wanted to ramp it up.
To protect his investment, Glen began researching the Detroit housing market. He discovered that the recession had impacted the housing market in Detroit severely, and now might not be the best time to help secure a bank loan for his family member's house flipping business.
But as I thought about it, and when we were starting the process and I looked at the landscape of Detroit, things had really begun to change. The recession really started there. Housing prices began to fall, unemployment began to rise. So I changed my mind and I just said, no, this is no way are we going to do this. It just didn't make good financial sense at all.
Thinking that was the end of his involvement in helping them secure financing, Glen assumed the family member pursued other opportunities to secure a bank loan. He noticed business was successful even without his help.
That family member, along with the banker, still proceeded, in fact, got a larger line of credit, and I was very close to them. So I saw these new cars and houses, and I originally just thought, wow, business must be really doing well.
Glen never thought about the deal any further, but a year and a half later, he discovered something disturbing.
I applied for a rewards credit card, and I was denied. So I was certainly surprised when that happened. And so I pulled my credit report, and I realized that there was this loan out there to a deal that I clearly didn't sign, that I had said no to all parties. And that was really the beginning of this process for me. Contacted the bank. I wanted to find out what was going on, and I quickly found out that the banker as well as the family member had done this really behind my back. In 2005, I completely backed out of this deal. Didn't want any part of it at all. And well, what I did not know was apparently the banker and the family member actually, some type of way, made the deal happen. The banker was ultimately fired, found out that there were many other people, well, there were a few other people who had gone through a similar scenario, like myself, unfortunately. And then they both immediately filed for a bankruptcy protection. So in order for them not to, I assume, go to jail, they of course sided with the bank, and the bank just wanted their money back. So who do you go after? You go after the one that maybe has, and they perceive to have a few dollars.
It was now the end of 2006, and Glen began the lengthy and expensive process of defending his credit.
From the end of 2006, when I discovered this, this was a long, drawn-out process that really wasn't over until the end of 2013. So we're really talking 6, almost 7 years of my life that, and over $200,000 in legal fees that I spent just to protect myself. And that's time I'm not going to get back, and money I'm not going to get back. Going through a process that I was clearly a victim and should not have even started. The bank tried to make a case, but because of my background, me being a highly decorated financial planner with degrees and designations, that there was no way that this could happen to someone like me. There was no way possible that I could be a victim of identity theft. But the truth is, it can happen to anybody. Anyone who obtains your information can sign up a loan or get a credit card or any of those things in your name. So the key is to make sure that I protect myself and we protect ourselves moving forward.
7 years and $200,000 was a tough lesson, but Glen learned a lot from this experience.
I learned a lot about my faith, more about who I am as a person, really how to protect yourself. That's what I've learned. So, we think that identity theft may come from some spy that's across the world, but it can also happen to someone who's right next to you, who sees you each and every day. And that's what I learned. I think about what would have happened if I didn't have the money. What if I didn't have $200,000 to pay the legal fees? It would have ultimately damaged my career, potentially, for something I didn't do. And if I'd had some identity theft protection, then I would have saw this early. When I applied for the credit card, that was about almost 2 years after they had done this. So if I had identity theft protection, I would have found out immediately, and everything would have been different.
If identity theft happened to this financial professional, it can happen to you. To learn more about identity theft and how Worth Financial Group can help you, contact them today and begin protecting your financial future.